The Beef Market Update with Ann Dunford on realagriculture.com is brought to you by Haney Farms, your canola, corn, and cereal seed experts. Find us at haneyfarms.com. We're here on realagriculture.com for the Beef Market Update with Ann Dunford. Welcome today, Ann.
Hey, Sean.
Okay, Ann, we are getting closer to Christmas. It's the week of Christmas. Everyone's in the festive season. The markets have really been in a festive mood.
Yes.
What's been driving this market higher on the feeder side and the fat side?
Well, we've had markets that just haven't really wanted to stop since summertime. We've had every week we've seen some new surprises to the upside, sometimes driven from the commodity side, just overall, some of it being driven from a demand or an export news or a supply story. But nevertheless, we've continued to march this market higher. And along with it, cattle prices, like you say, both on the finished cattle and, of course, getting into new highs this week in the U.S. on feeder cattle futures market as well.
So does all this line up to kind of carry through the first quarter of 2011?
Well, my famous saying is nothing goes up forever, but so far we've had just a fantastic fourth quarter, so we can't ignore what's happened here to close off the year. Heading into the new year, again, I got to lean on my seasonals and my historic numbers that say usually you get both the fats and the feeders slipping a bit in that first quarter. But again, we've had amazing demand through to tail off the end of the year, and just hard to, I guess I wouldn't bet the whole ranch on that, but I wouldn't be surprised, Sean, to be honest with you, for a bit of a setback in here. We have seen the U.S. place more cattle against that first month in 2011, and I guess at some point we've got to get through the numbers.
Well, this is the time of the year where people start to really think about turkeys as opposed to beef, but what is driving this demand?
Well, we've seen, of course, some improvement domestically on the demand side. We've seen a little bit of an increase in the food service or the restaurant traffic. We've seen that data come out. Not big, but most certainly recovering from the lows we saw last year. We've seen export business both for the U.S. and here in Canada better than last year. So both countries have exported more product, and kind of the feeling is set to for the base for higher exports again next year. And the biggest reason behind that, Sean, is we've got global demand continuing to grow, and that's for all proteins, but again, beef's a big part of that. So
the part that I think is confusing for some people is that we watch the shows like 60 Minutes, we watch CBC News World, we hear about still a poor economy in the U.S., a very slow recovery. We hear about all the European issues. Why has demand been so strong, though?
Well, and again, I think we have to be careful getting overzealous. We're still well off the levels we were before the recession started in 2008. So what I'm suggesting is we've made some ground and some gains from ground back. Having said that, is it straight up from here on the demand side? We've heard lots of talk this year, of course, about is a double dip recession or a very slow grind in recovery a possibility, and I suspect it is. But having said that, we're still looking at smaller supplies of protein globally, and that's being met. So I don't think you're going to see, unless we have a significant setback on the economy globally. I think you can say that the worst is in for now, but again, to assume it's straight up from here, there's going to be some blips along the road, I'm sure, but it is better, and so I guess that's how we're looking at it.
Everyone feels very bullish right now. What is something that could possibly drag this market lower in the first quarter? What has to change?
Well, I don't know what has to change, otherwise I wouldn't be sitting here. I think there's no question when one side of the market starts to go, and we've got fed cattle stronger. Of course, remember now feeder cattle are moving higher. We've got feed grains moving higher. So the cost scenario is a big factor, I think, and that'll probably be, I would guess the storyline in 2011, Sean, would be, yeah, we're going to have higher cattle prices. I think I'm going to make that assumption for now. But on the flip side, we're going to have higher cost scenario. So how do you keep the margin together in that? If you're a margin player, I think that's the card that has the most question marks around it for 2011.
For the ranchers you've been talking to, what is the mindset there? We've obviously seen some very strong feeder prices. Is there evidence that the cow herd size is going to start to grow here with these strong prices?
Well, what we've always historically said is get some profitability back into the business, back into the cow-calf side of the business, and that historically has come with it. I guess we're wondering in this phase, though, as we've watched what the American cow-calf producer has done or hasn't done. He's been profitable and he has not yet expanded his herd. So just to make that sheer assumption that we get better prices and we see some profitability start to return to the industry, I don't think it's necessarily a slam dunk that we're going to start to hold back heifers, because the only way, Sean, to build this herd is to hold back a heifer. We can stop the decline by slowing down how we sell off and cull our cow herd, but we cannot start to build until we start to keep some heifers. Anybody that's been around the auction market system this fall, I would suggest and has seen still a lot of heifers going on feed. Time will tell as we go through 2011. Do heifers that were initially kept back make it into the herd, or do they end up possibly getting sold as feeder cattle after the grass season next year? So there's still a lot of unknowns, and I don't think we're very close yet to any kind of expansion in this herd.
So what is it going to take in 2011 to start to incentivize people to start growing that herd and increasing supply?
Well, profitability is one thing. I think some confidence is another thing. We've had so many things hit this industry from behind or from the side that weren't expected or weren't seen. So I think we need confidence, and I don't think we're there yet. I think we like what we see, but I don't think I'd call the industry confident yet. And the other side, of course, is we've got demographics playing against us. I think you're young, you're sitting here. But at the same time, the industry itself, I don't think I would classify as young. And so that's another struggle for this business.
And I think the last 10 years have made the industry get older prematurely.
Well, yeah, fair enough. We've all got more gray hairs or wrinkles because of what's gone on in the last 7 years. But having said that, I think that's another issue for this industry and maybe for agriculture as a whole.
So when prices go up, like we've seen with the fat price and the feeder prices, we kind of always hit that point where people's mood starts to change even though things are still going up. Are we still in that kind of bullishness phase, or is there people starting to get a little bit concerned as far as how far we've come so quickly?
Well, no, I don't, and again, it depends which hat you're wearing here, Sean. So a couple of things. First of all, If you're a margin operator, if you're a backgrounder, if you're a finisher, you're going to say, oh, how do I keep this thing together? How do I manage risk in this environment? These higher prices give me opportunity to do that. Do I do it, and then I move on and play the next one? So, that's kind of the issue there. But on the flip side, if you're a cow-calf producer, I do think they tend to be cautious at heart. So I wouldn't put a bullish hat on them yet. But having said that, I do think that they're looking at things in a more optimistic light. And again, the margin operator is the guy that's got to watch his risk. I think that's the biggest card that we're going to play in 2011 is how do you, in this higher prices, how do you keep it all together?
When we look at different areas where there is grassland, we're going to have a lot of grass again this summer by the looks of things. Things look pretty good for the cow-calf person at this point.
Yeah, if you want to talk about higher prices, good forage supply, moisture, all those kinds of things. Sure, it looks like we're setting that up well as we go into next year. Is that one of the things I meant when I talked about confidence building? Absolutely. Now we need some of those outside things that hit us in regards to market access, the recession, global economy, those kinds of issues, which we really don't have any control of, but we need to feel more confident about the worst is behind us on some of those fronts.
Last question, very important question. What did you ask for Christmas this year?
Oh, Sean. Well, I can tell you one thing anyways. As I've gotten older in this industry, and as I've gotten older just personally, I most certainly wish health and happiness for everybody, and that's the most important thing as we delve into this business. Let's be here. It's a great business to work for and be involved in, and health and happiness all the way.
Ken, Merry Christmas, Happy Holidays, and we'll talk to you in 2011. It's hard to believe it already is 2011, but it is, so we'll talk to you in the new year.
Super, thanks, Sean. Thank you.